Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Sunday, the 7th of November. Starting off with 4D Pharma, which looks like it's finally broken a resistance line there, one from February this year. Level in question around 74 pence, and above that we're looking hopefully towards the shares hitting the 200-day moving average, currently around 96 pence. That ties in with the old August resistance for the shares, and that would be a good start on a potential recovery. The other point to note, I suppose, is that there is a resistance line there, top of the broadening triangle from this time last year, heading up towards 180. So if you're a fan of the shares, maybe that's what you could be willing to happen over the next few months. Stop loss at the moment probably as tight as an end of day close back below the 50-day moving average and what was formerly October resistance as well, around the 70 pence level. So between 70 and 75 pence probably the place to go. Onto a stock which is breaking out to the upside quite well. We've got eTherapeutics, wide rising trend channel for the shares, and that's been in place since December. Top of the channel looks like it's heading as high as 70 pence, so that could be a great 2 to 3 month target and valid while we hold above, I suppose, the late September resistance around 35 pence, 36 pence. So above that area up to as high as 70 pence maybe for January, February time on eTherapeutics. So looking impressive. On to a newer entry on the stock market, Caracal. You can see that the shares came back from that the dizzy heights towards 1.9 pence at the beginning of last month. But it looks as though we found support in what was support ahead of the spike towards the best levels. So 1.2, 1.3 pence looks like the support area for the shares. That theory backed up by Thursday's low, just in that in the middle of that zone, or at the lower end of that zone. All waiting now maybe for a fresh signal to the upside is a break of 1.4 pence, which is that resistance line from last month and the 50-day moving average. But basically, it looks like the 1.2 area was the dip area to buy into for the stock. Looking at the longer picture, you can see a rising trend channel from the start of trading on Caracal, and that's heading towards 2.1, 2.2 pence, which might be a reasonable 2 to 3 months target for the shares. But upside value while we hold above, I suppose, an end of day close back below 1.2, or if you're fussy, back below that 1.17 level that we had at the end of September. Onto a stock which is not quite so high profile at the moment, HEIQ or Hike. Here you can see that we've had a very strong rebound off the back of bullish divergence for the shares. That took the shares back below the 80 pence briefly, but they have rallied strongly since. Looks as though while we're above resistance on the way down, which was around 103 pence, we could see the shares at least up to the old floor, which was £1.22 back in July, and then maybe up towards 140 to retest the resistance line there from April. Time frame on that, maybe the next 4 to 6 weeks or sooner for the shares, but upside valid while we hold above 103, I think is the best way to go there. On to Makanga, Makango rather, which has done extremely well over the last couple of sessions. I suppose we were waiting for the big breakout, and it's finally arrived. Very good weekly close as well, above the old peak at 34 pence from back in May. What we're expecting now is that at least while we're above 30 pence, we could see the shares hit up to 55 pence perhaps on a 2 to 3 month view. So maybe by the end of January, something like that. So quite a lot to shoot for there. On Makango, you could argue that I suppose since May we've really been consolidating near the highs, and now the logjam is broken, we are ready to go. Onto a stock which is also something of a relief that it's in an improving tone, Nuformix. Wanted to see the shares clear the 1.6, 1.7 area, which I suppose they did. The negative was that on Friday we pulled back from the 200-day moving average at 2 pence, but I'm sure we could have another go while above 1.7 on an end of day close, looking for 2 pence again, and then perhaps up to 2.5 pence by the end of the month, something like that. Onto a company which I've liked from the start, Oberon, and here we can see that I suppose other people have liked it from the start as well. Mentioned in the Mail on Sunday today, or This Is Money, which maybe will help too, but really breaking out of that 5 pence zone took the shares onto an accelerating trajectory. And the view is that while we're above 7.25, which was September's peak, we could see a pretty good new leg to the upside, perhaps as high as 14 pence on a 2 to 3 month time frame. So one of the winners on Aquis at the moment. And really, while we're above the 50-day line, looking for further significant gains here. On to a stock which has also rehabilitated itself quite well, Rambler Metals and Mining. Here we've got a situation where we've held on to most of the gains of last week, which is good, but we are waiting for an end-of-day close through the 200-day moving average, 31 pence. If we can clear that, then it should be on to 31 pence. The upside valid while we hold above that mid-October peak at 25. So above 25, looking for 40, which is a sort of typical charting setup for a stock at the moment. On to a stock which has had a very decent run in the recent past, Transense Technologies, especially after that pull back towards the 200-day line, which it actually didn't actually hit. So the current situation is we've had a weekly close at new highs, and the longer we stay above that old September peak, £1.18, the greater the chance of a move over the next 2 to 3 months, as high as £1.80 at the top of that rising February price channel. We've got both the 50 and 200-day moving averages rising in parallel, so looking rather healthy at the moment. On to the last 3 stocks. The first one is which is Ben's Creek, which is on the sort of shorter time frame here, because obviously it's not been around very long. Technically, things worked out because we had a dip down towards the floor of the gap there at around 18 pence and bounced off that. Probably looking for a break of that 50-period moving average there at 20.5 pence. If we can get that, then we could have a new leg to the upside as high as 32 pence over the next 2 to 3 months. But I'm guessing that progress over the near term now may be slightly slower than the ballistic start that we had from 10p just last month. Only any earlier break back below 17 pence really delaying the upside scenario for Ben's Creek. On to another newbie for the stock market, coming in the form of Tungsten West. Here you can see that shares have also had a flying start within a rising trend channel, which has been in place, if I can get it to come back again. Rising trend channel, which has been in place since the shares came to market. Current view is that we're in a rising trend channel, which is between, let's say, 75 and 96. And above that lower level, looking for a target here is near to 100 pence, which could come by the end of the year. But a very solid move there, and above the mid-70s, looking for further progress on that situation. Stock which has also had been on something of a flyer is Light Science Technologies, and here we've got this sort of broadening triangle, floor or support here around the 20 pence or 20.5 pence level. While we're above that, we're looking for a fresh leg to the upside, perhaps as high as 36 or 37 pence. But if you're cautious, you'd wait either for a break of that resistance line there around 22.5 pence, or the 50-period moving average at 25 pence. Those would be the momentum triggers for a potential new leg to the upside. That's it from me today. More updates during the week.